Good afternoon, everyone. Today is Friday, May the 27th, 2016. The markets are not even closed yet. I'm doing this intraday. It won't really change a lot of my analysis here. So let me give you a quick look here at the S&P 500 Large Cap Index. We're going to look at the 6-month chart. Each one of these candlesticks represents 1 day of trading activity. So right here, you can see this one highlighted in yellow. It's still forming. Like I said, the market has not closed yet, so it'll be changing. But the main thing I want to talk about today is whether or not now is the time to be going long in this market, and kind of give you a little bit of an update here, or a review at least. Back during this time period here, we told you to go long and took advantage of this here. Back when we had this cross of the short-term moving averages, the symbol SMA, the 10 period, and the 20 period. Okay, and you can use the exponential moving average or the slope moving average, whichever one you prefer. But anyway, when this happened, we told you that this was something we liked and we would go long here. However, some people took that to mean that we like to go long whenever we see the simple moving averages cross in a bullish way, or we go short whenever they cross bearishly, right? And we kind of do in certain essence, but it's not the actual logic behind our trading. It's a signal for us, but it's not why we got into the trade to begin with. Also here you'll see that you had a cross of the bearish side here, and we told you that would be the last item that you would see on the end of your bullish move to the upside. Once that had happened, there was no longer any reason to be long this, and so people kind of looked at that and said, okay, whenever the markets are moving in one direction or another, he looks at the simple moving averages, the short-term 10 period and 20 period. When they cross bullishly, he goes long. When they cross bearishly, he goes short. Not actually. What we talked about when it was happening was, if you look at the force index, this dark shaded blue area in the background here behind price, see a low point here and then a higher low here. Okay, this gives us a indication of a bullish divergence. We have actual price activity was trending lower. Look at the low close here and the lower close here. It's trending down. All right, and the force index in the same time period and the low points are going. I mean, low points here going like this, trending up. That's a bullish divergence, telling us that price is probably overshooting to the downside. So that's what we're focusing on right there. Then we wait for that signal. We want to see that cross of that short-term moving average, right? And then getting it pulled back to that level. Any time you get down there, you get entry opportunity at that 10-period moving average or 20-period moving average. And you continue to stay that way until you start to see it break down, right? So you see this price activity is bouncing off this blue line right here, on here, 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 okay, pierces it here, keeps going again here, 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 right, and then we start to bounce off of this one. Now this is telling us that we're starting to break down the momentum. The nice move to the upside is starting to wane, fade out, right, and so you start to break down here. This could be your exit point, or you could wait till you actually have a cross of the 10 period below the 20 period, which happens here. Okay, now at this situation here, people look at it and saying, okay, Christian, right here you've got a bullish cross of these two indications, right? You're looking at the simple moving averages right here. That's accurate. However, you're overlooking something. This right here, that bullish divergence right here, is what got us into this. Over here, we were telling you that this time period, you had a high point here, lower high on the force index, even still lower, right? So this is trending down while price was continuing to trend higher during that time period. This was a warning sign to us. We told you this was not good. There's nothing to get involved in here. We're looking for our exit. And then that's what happens, right? We get confirmation right here. Now you've got this cross everyone's talking about, saying, hey, right there, there's your opportunity to go long. That's the signal that you look for. You've got a nice up week. No, this is not what I'm looking for. The first thing I'm looking for is a bullish divergence. I don't see one that's impressive enough for me at this point in time to get on board. I'm not looking at these little tiny minute details, but just trying to bring it to your attention and say, show me a bullish or bearish divergence, then I'll look for an entry opportunity to get in on the long side or the short side. Just price activity goes up for a week, that's not bullish for me. Just cross of a short period, 10 period or 20 period moving average, simple or exponential, no, that's no big thing here. Here you've got a bullish cross right here. Didn't help you much, right? Here you've got one as well. Didn't help you much. So just crossing doesn't do anything for me. I want to see a bullish or bearish divergence, then I look for the opportunity to get long or short. Okay? Just want to share it with you. God bless. Take care. Enjoy your weekend and be safe.